Hello students, Assalamu alaikum. Today we will continue our paper 22 of November 2023 O levels. So see your paper. Okay. This is your paper. We have started yesterday and today inshallah we will try to complete it. Okay. Today we have to start from question number 3. November 2023, paper 22. Okay. This is question number 2. Question number 3. Okay. Lionel started trading on 1st July 2022. He paid rupees 15,000 of his own personal money into the business bank account. It's a starting business. So this is the initial bank deposit and initial capital. Okay. He did not keep the full accounting records, but he has supplied the following information on 30th June 2023. Now 1 year has gone. Cash sales 90,000. Okay. Were made and paid into the bank. Okay. No other money was received. General MAC markup is good at the rate of 50%. This is the markup. Okay. Means above cost, 50% above cost. Okay, now payments, purchase of motor van, payment to creditors, wages, general expenses, rent and insurance, motor expenses, cash drawn from bank. Purchase returns, okay. Inventory, or closing inventory, there is no opening inventory because it's a starting business. 1/3 of the motor expenses paid for Leonis private car, so it means out of motor expenses, we have to deduct 1/3 of the motor expenses because it's part of drawing. A full year's depreciation is charged at 25% on the van using the reducing balance method. Okay. This is drawings. Leon withdrawal 1,000 each month from the business means 12,000 per annum. Okay. 12,000 per annum. Okay. The remaining cash drawn from the bank was used to pay wages. Okay. So what we have to do now, we have to make an income statement. Okay. So what we do here, we write sales 90,000. Okay. Now the thing is, yeah. You know, it is very easy to calculate the cost of sales. Okay. How? See. Sales 90,000 is actually 150%. So if we take cost as X, it means cost should be 100%. So if we cross multiply, we'll get the value of X as X is equal to 90,000 multiplied by 100 divided by 150. And we easily get the cost of sales. Okay. So how much it would be? 90,000 multiplied by 100 divided by 150. 60,000 is the cost. Getting my point? So cost of sales, COS, is equal to 60,000. But I was thinking of this amount. Why they have given purchase returns? If we can easily calculate cost of sales here. Are you getting my point? So it means we can use this 60,000 as a cost of sales, but we have to calculate the amount of purchases as well. This is the problem. Getting my point? Okay. So even we don't need closing inventory. But these two items are given that indicates that you have to calculate purchases. Anyhow. So sales, now see. Here we write less cost of sales. Okay. Now, because we do not have inventory, so what we do, we write here purchases. Okay. Then we'll deduct closing inventory. Closing inventory. Okay. Which is how much is closing inventory? Yeah, 4175. Closing inventory. Uh, Actually, this sales should be reported in the next one because we don't have sales returns. Okay. First, we have to deduct purchase returns. Purchase returns, and we have to deduct in closing inventory. Okay. And we get cost of sales here. We know cost of sales is 60,000. Okay, we have calculated using formula. So what we do, 60,000 we have reported on. Now closing inventory, that was I think 4175. 4175 and 3000 purchase returns. Okay. Four, 4175. Closing inventory. Okay. 3000 purchase returns. Okay. And we get here cost of sales. 60,000. Got it? Then what is left? Purchases. How we calculate purchases? This is now very important. And I think it's not that much difficult for you. Now see, 60, if we add these two items, purchases minus these two items, we get cost of sales. So if we go in the reverse direction, what we have to do? We have to add them. Okay, 60,000 plus 4175 plus 3,000. So it means purchases must be 67,175. Got it? And this amount should be kept in the bracket. Because we have to deduct cost of sales. And 30,000 is going to be our profit. Gross profit. This is our gross profit. Got it? Okay. Now, what we have to do, we write here heading expenses. Okay. See what are the expenses available. So first is wages. 8060 is the amount of wages. And okay. Okay. Now the thing is, yeah, Lionel withdrew 1,000 each month from the business cash. For personal use, the remaining cash drawn from the bank was used to pay wages. See, total cash drawn is 14,600. Okay. Now 12,000, out of which 12,000 is drawings, 1,000 per month. So 2,600 is left, and which is used to pay wages in cash. So wages would be 8,060 plus 2,600. Getting my point clear? 8,060 plus 2,600. 10,660. Okay. So first thing, wages. $8,060 plus 2,600 altogether 10,660. Okay. Now general expenses 1140. I don't think so. There is any adjustment available for general expenses. Okay. This is 1140. Okay. General expenses. One one four zero. Okay. 1140. Then we have third expense. Rent and insurance 5585. I don't think so. We have any adjustment for this amount. Rent and insurance 5585. So rent and insurance. Five 5585. Then we have motor expenses. Motor expenses 4,992. 1/3 of the motor expenses were Lionel's private car. So 4,992. 4,992 multiplied by 2 divided by 3. 3,328 is going to be our motor expense. Motor expense right here, 4,992 divided by, multiplied by 2/3. That would make it how much? 3,328. Okay. Now next, we have all expenses we have done. I think this one is left. Depreciation 25% on when using reducing balance method. So 8,000 multiplied by 25% depreciation. So 8,000 multiplied by 25%. So that would be 2,000. Okay. Now add all these items. 10,660 plus 1140 plus 5585 plus 3,328 plus 2,000. 22,713 total expenses. Okay. $22,000, and we have to keep it in bracket. 22,730. Okay. So if we deduct 22,713 out of 30,000, the profit for the year 7,287. 7,287. This is profit for the year, or net profit. Okay. This is done. Okay. What next? Prepare Lionel's capital account for the year ended 30th June 2023. Balance account and break down the balance at 1st July 2023. Okay. Now, 2023, no, sorry, 2022. July 1st. We started his work on 1st July with 15,000. Reason Bank, 15,000. Okay. And this is July. Okay. On now, this is it. Again, this amount is going to be created on uh, hmm, uh, June 30, 2023. June 30. Okay. 2023, June 30. Okay. Here again, the profit for the year will be created. Okay. Profit for the year. Okay. That would be how much? 7,287. 7,287. Okay. Now, 2023, June 30. We have drawings. Okay, drawings is 12,000 we withdrew from bank for personal use, and this motor expenses include 1/3, which is for the owner's personal car. So we have to calculate 1/3 over here. 4,992 divided by 3, that is 1,664. 1 plus 1,664, so 13,664 total drawings. 13,664. Now, 30th June, balance CD. How much? So if we get a total over here, ज़्यादा बड़ी हो गई line. Okay, yeah, and so what we get? 22,787. Okay, sorry, 287. 22,287. और मुझे ऐसा लगा कि 787. ठीक है, और माइनस 22,287 minus 13,664. So closing balance is 8,623. 8,623. So that will give you 22,287 here. Oh, 22,287. Account is closed. Please, all of my beloved students, don't forget to write the new balance BD. Okay, this is a mistake. You will lose 1 mark. Okay, this is 2023, July 1st. Okay, balance BD would be here. How much? 8,623. Okay. 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 State one reason why Lionel should keep full accounting records. It means you have to mention here uh, the advantages of double entry bookkeeping. Means all accuracy. You can write accuracy. You can write complete information. Okay, easy to use, easy to make, and there are so many things you can write away. Now, trade discount and cash discount. Trade discount is given on bulk purchases and cash discount is given on prompt position. Whenever you offer this discount, these discounts are helpful, but not always. Okay. Okay, what's next? Okay. Okay, question number 4. Rachel is a trader. The total of Rachel's trial balance prepared on 30th September 2023 did not agree and the difference was placed in a suspense account. Rachel later discovered the errors shown in the figure. Okay. Complete the following table which way entry required to correct each error. The first one has been completed as an example. A payment for rent 350 had been debited to wages account. So what we do, we debited rent payable and we created wages account. Okay. The sales journal had been overcast by 90. This is an error of casting error. So what we have to do, we have to debit sales by $90 to decrease the sales. Okay. And suspense is going to be created 90. What I tell every time my students that you should go for the correct item. The other item would be suspense. So don't worry about that. Getting my point clear? Okay. Now, a payment. Okay. Sales return had been recorded as purchase return. Now, here, sales return is going to be debited, which has not yet been debited because of this error. Okay. So we have to debit 110. Now, purchase return, when we record something as purchase return, is going to be created. So what we have to do, we have to debit purchase returns by 110. Getting my point clear? And suspense is again going to be credited by 220. Okay. Now, a payment for office expenses 18 had been recorded in the office expense account is 81. This is error of transposition. Are you getting my point clear? So what we do, we have to decrease office expense by how much? It has been recorded as 81, though it was, oh God, can't get calculated. 81, actually it was 18, so 63. So what we have to do, we have to decrease office expense. So when we are decreasing office expense, it's going to be credited. Office expense 63. So it means suspense is going to be debited. Okay. Amount $63. Okay. A petty cash book payment $9 to coal a supplier had been recorded in the column of motor expenses. When we are paying something to a person, so that person is going to be credited. Okay. That person is going to be debited and amount is going to be credited from cash book or petty cash book. So we have debited motor expense. So what we have to do, we have to debit coal because it was left to be debited 29, and motor expense which was wrongly debited is going to be credited 29. Okay. Prepare a suspense account, include the balancing figure as the original difference on the trial balance. Okay, when we are making a suspense account and we don't know the opening balance, okay, so what we do, okay, we are making it, but we don't know whether it is coming on this side or this side. So what we do, we write here 2023. Okay, also here 2023. Okay, all these things happened when 30th September 2023. Okay, so take out the first one. In the first entry, we do not have suspense. This entry, we have suspense is going to be credited. Okay, so what we do, we are going to credit suspense. So suspense is going to be credited in the first entry by $90. Okay, so what we do, we create suspense by $90 and the date would be 30th September. And the reason would be sales. Yes, obviously. Okay. Then we have debited. No. Again, we have created suspense to 20, but there are two reasons. So what we do, suspense, we'll write sales returns and purchase returns and here we'll write 110, 110. Okay. Then, okay, suspense is going to be debited by 63. Okay. The reason was office expenses. Okay, that was 63. Now, the opening balance must be on this side. Okay. Balance difference. Of trial balance must be here. How much? So we have to calculate now. Okay. Okay. See. 90 plus 110 plus 110. 310 minus 63. 247. 247 must be the difference. And here we have 310. Okay. I think suspense is the only account where we do not need balance brought down. Okay. Raquel's draft profit for before the error was discovered was 18,243. Calculate Raquel's profit for the year 30 September 2023 after the errors in the table have been corrected. Okay. So what is the drafted profit? dollar 18,243. Okay, now first error. Okay, first error which is going to affect is uh, office expenses. Office expenses. Okay, see how these errors are affected. Okay, this error is not going to affect the trial balance, is not going to affect the profit. Okay, yes, this error, because sales is decreasing, it means $90 we have to reduce. The revenue is going to be reduced, it means profit is going to be reduced. Okay, now sales return and purchase return. Sales return reduces profits because sales revenue, because it decreases sales revenue. So sales return is going to be uh, going to decrease the revenue, the profit as well. Purchase returns actually increases credit. So when it is increased, it decreases cost, increases revenue. But here purchase return is debited. It means purchase return is decreasing. When purchase return is decreasing, it means the revenue is also decreasing. And ultimately the profit. Okay. Office expenses. Yeah. 63. Office expenses are decreasing. It means profit is increasing. Okay. Motor expenses. Now here, what they have made the error. Coal is a supplier and motor expenses is expenses. So this expense is actually going to decrease. So decrease in expense ultimately increases profit. So two items we have to add, this 63 and 29, and three items we have to reduce. We have to deduct to reduce the profit. Okay. So what we'll write? Less sales. Sales is how much? That is $90. Less sales returns. That was how much? 110. Less purchase returns. How much? 110. So total deductions are how much? 310. 300. Now add two expenses we were supposed to add. First was office expense and motor expense. Okay. Office expense. How much it was? $63. And motor expense. It was dollar how much? 29. All together 29 plus 3, 92. So this amount is going to be added. Okay. Now here you get the corrected profit. How much? 18,243 minus 310 plus 62, 17,995. Oh, 1 63 plus 29. That's 92 यार क्या लिख रहे हो? Okay. So 18 243 minus 310 minus plus 90. 18,000. Okay. This is our corrected form. Done. Statewide financial statement may still be reliable even errors are present because okay, there are some trade errors which do not affect mostly the figures. Sometimes they are irrelevant or they do not affect the trial balance agreement and do not affect the total expenses and revenues that were still some errors become so irrelevant that they do not going to affect the trial balance. See, yes, yes. This first error, which is done by the examiner, this error is not going to affect the trial balance, not even going to affect the revenue. So that error become irrelevant. Okay. Now is a retailer who sells toys and games. All sales are on cash basis, all purchases are on credit. She has provided the following information. 31st August 2023. At 31st August 2023, inventory, cash at bank, trade payable, capital. Okay. For the year 31st August 2023, revenues, purchases, expenses, inventory on 1st September 2022 is given. Okay. Compute the following. Gross margin. I must tell you one thing, whenever you are going to practice ratio analysis is just like a compulsory question in our papers. Every time I found, whenever I go through, I found ratio analysis, when it was 7110, principles of account, when it is account 7707, I found ratio analysis have always been there. So we have to be you have to do this question in exam. And second thing, whenever you solve this question, wherever you are with your teachers, what you have to do, always write formulas again and again when you solve this question. So in that way, whenever you solve these questions and when you write the formula again and again, you will remember the formula. Because this question is a game of formula. So what we do here, see, gross margin means gross profit okay divided by sales divided by sales multiply by 100. Now I remember the formula. Okay. Now, what is the gross profit in this case? We don't know. So what we have to do, we have to calculate gross profit first. Okay. So revenues minus costs of cost of sales is equal to gross profit. Okay. Now, before that, what we have to do? We have to calculate cost of sales. How we calculate cost of sales? Okay. Opening inventory plus purchases or rather one plus purchases. Okay. Less closing inventory is equal, and you get the cost of sales. So, what's next? Cost of sales is equal to opening inventory is how much? 6175. Here it is. This is opening inventory. Okay. Plus purchases 78,130 minus minus closing inventory. This is closing inventory 6265. Answer okay. Okay. Hmm. 6175 plus 78,130 minus 6265. 78,040. 78,040. Okay. Now come here. Revenues 98,420 minus cost of sales 78,040. So gross profit would be how much? 20,380. 20,380. Okay. So here 20,380. Okay. Divided by sales 98,420. Okay. Multiply by 100. And you get the answer. 2380 divided by 98,420 percentage. That is, they need answer to two decimal places 20.707. 20.707. So make it round off 20.71%. This is the answer. Okay. Now profit margin means net profit divided by sales multiply by 100. In that way, we remember the formula. Okay. So we do not have net profit, right? So what we do, how to calculate net profit? Gross profit minus expenses is equal to net profit. So gross profit is how much? 20,380 minus expenses 11,325 is equal to how much? 20,380 gross profit minus 11,325 expenses 9055. Okay, 9055. Okay, so here we have 9055 divided by sales 98,420 multiply by 100. ये 100 1100 कहाँ से लिख दिया गलती होगा. Okay, the answer would be see 9055 divided by 98,420 percentage 9.20. Getting my point clear? 9.20. Now we cannot round up 9.20%. Okay. Now come here. Return on capital employed. Return means profit. Capital employed is how much? Capital employed. Where is capital employed? Capital employed here is capital employed. Capital plus long-term liabilities. So because here we do not have long-term liabilities, we call it, this is our capital employed. We have only amount of capital invested by the owner, not the long-term liabilities available. So what we write, net profit we know, net profit or return, okay, divided by capital employed, okay, multiply by 100, multiply by 100. So here we are 9,055 divided by capital employed, how much? 1,25,000 multiply by 100 and we'll get the answer over here. So what is the answer? 9055 divided by 1,25,000%. 7.244. So we can make it 7 point. Okay. Now come to rate of inventory turnover. Formula is cost of sales divided by average inventory. Okay. Cost of goods sold divided by average inventory. Come again here. We have cost of sales available. Yes. 78,040. This is cost of sales available. But we do not have average inventory. So we are going to calculate average inventory. Average inventory is opening inventory plus closing inventory. Opening inventory plus closing inventory and divided by 2. Divided by 2. So what would be the average inventory now? So average inventory is equal to opening inventory is how much? Yeah, 6175, closing inventory 6265. 6175 plus 6265. Okay. This is and divided by divided by 2. So average inventory would be how much? 6175. 6175 plus 6265. 1244 divided by 2, 6,220. 6,220. Got it? So cost of sales, we know how much is the amount of cost of sales? That is 78,040. Okay? 78,040. Okay. And divided by average inventory was how much? 6,220. 6,220. So answer would be in times 78040 divided by 6220 12.546 times. Okay, we will call it 12.55 times. Okay, liquid asset, liquid ratio, acid test ratio. Acid test ratio means quick asset divided by current liabilities. क्या formula है? So we remember the formula, quick assets divided by current liabilities. Okay. So what are quick assets available we have? Okay. First we have to delete all these things. So there's so much traffic here now. So closing, we have only one current asset, quick asset available, that is cash at bank. This is the only current asset available, quick asset available. Inventory is not quick asset, it's a current asset. Trade receivable is a quick asset, but it's not available. And one current liability, trade payables 4880. Okay. So 992, what we are going to write here? 992. Okay. Divided by the one and only current liability, that was 4,880 accounts payable. 4,880. So answer would be 992 divided by 4,880. The answer is 0.20 ratio 1. 0.20 ratio 1. This is how we answer a ratio. Okay. What else now? Nala increased advertising expense over the year to 31st August 2023 and sells at a lower price than her nearest competitor. This has resulted in Nala selling her inventory faster than her nearest competitor. Nala and nearest competitor buy inventory at the same price. Nala is pleased with her result. Explain why Nala should not be entirely pleased with her result. When she's buying from the same competitor at the same price, the competitor is selling at the higher price. It means when she's selling at the lower price, it means the basic problem is gross profit margin ratio is decreasing. Okay. So in this question, you have to keep all the ratios keeping in mind and answer them. Okay. Nala is going to expand the business to take out a bank loan to finance the expansion. The loan would be repayable after 5 years. When she will start loan, her return on capital employed will decrease. The basic impact of our long-term liability is on ROC, return on capital employed. Okay. Because with capital, we have to add with the denominator return on capital employed includes capital invested by the owner plus long-term liability. The state by Nala's bank would be interested in her finances if she requests the bank loan. Because the bank is interested just to know that whether she is in a position to pay off the loan or not. Simple is that reason. Okay. So that's the end of the paper. Okay, students, thank you for today. Inshallah, tomorrow I'll come up with my next paper, which is AS level paper 12 MCQs, inshallah. So take care. Allah Hafiz.